Good morning, dear. So, welcome back at ICICA Tube channel and ICI app as well as SSP portal and everywhere wherever this live telecast is to be made and later on the recorded will be available. I'm thankful to ICI for providing me this platform so that I can interact with the students for the purpose of their benefit as well as the benefit of the ICI because when more and more students will clear CA course, obviously the weightage, the value of our profession will be uplifted. So I'm thankful to all of them, the complete team of ICI. Let's start with the topic where we have left earlier. Yes, good morning to all. Siddharth, Hitesh, Anik, Annie, Sudhanshu, Rahul, Karthik, Sudhanshu, Meman, Sonika, Aditi, Yashasvi, Etha, and others whom have not sent their presence. So I assume that number of students are available. So send your presence. I received a query also. That is also good. Brief recap of AS7 is there. That is required, obviously. Before that, I would like to take any issue if there is in AS5. So tell me if there is any issue in AS5, beta. Good morning, Pooja, Garichi, Kenny, Shri Ram, Shruti, everyone, and many, many, many more. I received a query. What is the difference between extraordinary item and exceptional items? So let's understand this that if any activity is there in routine, then it is an ordinary activity. But whenever we are talking about extraordinary activity, what it means for that purpose, I would like to go for the definition of this. Just a moment, I'm going to share my screen for this purpose because in that case you will be more benefited, beta. Yes. Yes. What is an extraordinary item? The definition is given in your AS. Income or expenses that arise from events or transactions that are clearly distinct from the ordinary activity of the enterprise. Means these are such activities which are not occurring in routine, which are which have occurred rarely, are named as extraordinary. But this relates to our business. This relates to our working in routine. It has been occurred in relation to our business. These are those items which are distinct from the ordinary because this doesn't occur in routine and are not expected to reoccur frequently or regularly. Whenever we are talking about earthquake, that is not going to occur again and again. So extraordinary items are those activities which are basically happened or worked in relation to our business, but these are not frequent in nature. These are not recurring in nature. Whereas we are talking whenever we are talking about exceptional items, beta, so these items, when item of income or expenses within profit or loss from ordinary are of such size, nature, or instance that their disclosure is relevant. Means these are the items which are ordinary items. But these ordinary items have a different type of value, means they have an extraordinary value. their value is too much that we must have to disclose them separately. They may occur in routine, there's no problem, because whenever we are talking about ordinary activities, these are the activities which are relating to our business and they occur in routine. So these are ordinary activities, but their value, their size, their nature, or their incidence is that their disclosure will be beneficial for the material impact or the material decision making of our users. Like whenever we are talking about writing down of our stock, stock is always valued at cost or NRV, whichever is less, and this is a routine. But when this has a impact on the decision making, because it has been done during the year, there is no problem at all. We are doing it in routine whenever we are purchasing goods from somewhere. It may happen that those are not of that quality, whatever we have expected when we have purchased it. In that case, we may reduce it to its NRV. There may be a chance that we have reduced it to its NRV. And that is not required to be disclosed. But when it has been done 31st of March, that is the day on which we are closing our books of accounts. If we have done it as on that date and made it for all the inventory, whatever is lying with us, we are not doing valuation of a part of inventory on its NRV. Instead, we are doing it for the whole of the inventory. In that case, it is required to be disclosed because its value will be too much, its impact will be too much. Then we have disposed of our fixed asset, and this is a routine. Well, we can't say that we are disposing of our asset in routine, but this is not extraordinary. Whereas whenever we are talking about uh, earthquake, or you may say a building has been uh, stalked by someone, or you may say there is a big loss due to lockout in our business. COVID is there. Due to that reason, our business has been shut down. These are all extraordinary items. But whenever we are talking about sale of fixed asset, sale of long-term investment, this is a routine, but it is not an ordinary activity. That we know it very well. So it is not an ordinary activity, but it may occur. There is not a problem. We are not going to suffer from this loss. So that is a disposal of fixed asset, disposal of long-term investment. Means these are the activities which are done not in routine, but these relates to our business, and this doesn't create any big problem for us. This is a part of our business. Extraordinary item is not part of our business. That happens unimaginably. Suddenly it happens, and it is not in our expectation. Whereas fixed assets must be sold. There may be some time when we have to sell our fixed asset. There may be a time when we have to sell our long-term investment because it is required. We must have to value our inventory at cost or NRV, whichever is less in routine. Or all that, these are the points. So I assume it is clear, beta. Question number 2B, page number 1.17. Explain the solution, please. Okay. Page number 1.17. Question number 2B. I don't have a page number 1.17 according to my opinion. I may check it out. No, there is no such page number with me. Beta. No such page number. Question number 2B of which AS that you might write better. Kushi, I have already discussed in my previous lecture how to write answers for the AS questions in exam. Don't worry, we will have some examination problems with us, which we will discuss. In that, I will show you. Otherwise, we have illustrations with us. These illustrations are also very helpful to understand how to appear, how to give answer in the exam. We will see it. Karthik, sir, second point in illustration number 2. Okay, this is for prior period item. Okay, illustration number 2. A company signed an agreement. This is AS 5, point number 2, illustration number 2. Signed an agreement with the employee union for the revision of wages with retrospective effect. This would cost the company an additional liability of 5 lakh. Is a disclosure necessary for amount paid in 2012-13? Exactly, beta. This is a very good question. In this, they have revised the wages from retrospective effect, but it is not a prior period item because this has not resulted from any error or omission. Prior period items are those which results from errors or omission. What it is, this is a policy which has been framed in this year that we are going to give them the more wages. So this more wages will be additional liability for the company. Hence, it is to be disclosed in a proper way. Its disclosure is required. So answer is to be given. Kushi, you may also see, and others may also see how to give the answer. Whenever we have to give the answer, first of all the best way is we must have to correlate with the point, whatever answer is there. So this can be started from here. As per AS5, when item of income or expenses within profit and loss from ordinary activities are of such size, nature, or instance that their disclosure is relevant to explain the performance of the enterprise for the period, the nature and amount of such item should be disclosed separately. This is a point which is to be mentioned in the beginning. In the starting, we must have to mention it. It is mandatory. You may say that whatever your answer relates to what. If your answer relates to this topic, you must have to mention this topic. So relevance should be correlated. So it is very much clear this is an ordinary activity, but this ordinary activity are of such size and nature it is to be disclosed. So we can say that it is just like a activity whose disclosure is required. So to prove it, then you have to write in the given case, revision of wages took place on 1st of September with retrospective effect, but it cannot be taken as error or omission. Hence, additional wages liability of 7,50,000 should be included in current year wages. Mentioned that additional wages is an expense arising from an ordinary activity. Such an expense doesn't qualify as an extraordinary item. That's it. Means question should start from here as per AS answer should. It is to be given in the beginning and then you have to give the comment. This is the way how you have to give the answer. Note in page number 1.13 at the bottom, student may provide a suitable note. What kind of note should be? Puja, where you are seeing this is note 1.13. I have no 1.13 page number. But from where you are seeing, better you may refer the question number or the AS number. That is always better in this case, because whatever latest notes I have with me, those doesn't have any reference of these 1.13 or 1.12 page number. Aditi, sir, please explain that whether the item of ordinary or extraordinary depend on its nature, but not the frequency of items. Ordinary activities are those activities which occurs in routine and which are relating to our business. Extraordinary items are those activities which happens to our business, but their frequency is not there. Their nature is important because their nature is of such nature that that happens in sudden and we are not expecting that in our life. Like we can't expect COVID, we can't expect earthquake, we can't expect tsunami, we can't expect these type of things. So the result of these will be the extraordinary. Otherwise, whatever occurs in business that have a big size or nature, we have to give its disclosure as a ordinary activity only. And then we have exceptional items. These are those activities which are relating to our business, but they have some special nature. Their nature is sale of assets because sale of asset is not our ordinary activity, but it is a part of our business. Writing of our assets to NRV, sale of long-term investment, these are all part of our business, but these are not ordinary, so these are named as exceptional items. Is there any monetary criteria to disclose based on volume. This is according to business beta. If your expenses are 5% of or more, means if your expense is 1 crore and a particular expense is 5 lakh or more, then you may disclose it. It may be taken as 10% also, it is just our understanding, but not more than 10%. Means those expenses which covers 10% of your expense or 5% of your expense or more must be disclosed in a proper way. That is the criteria which I may adopt. And this is just our understanding. Whether the item is ordinary or external depend on done. Page number 1.17 here I am not able to understand. AS5. Okay, AS5. What is the point? Page number 1.17, illustration number 2. Illustration number 2 we have already discussed beta. This was the illustration number 2 we have already discussed beta. AS5. Sir, prior period items is as such that we can charge their expenses on someone. Then will that still be an expense for us? As such that we can charge that expenses on someone. Then will that still be an expense for? This is not clear, Kiran. Prior period item meant for those expenses or incomes which has been left by us due to error or omission in the previous period. So if any such expense or income comes to our knowledge later on, we can enter it as a prior period item. Now 75,000 has come. Okay, 75,000 has come. Illustration number 2. But there is no 75,000 with me. Here I have no 75,000 in my notes at all. I have checked it from my notes. No value of rupees 75,000 is there. Explain the solution of illustration number 2, point number 2. That I have already explained beta. Time is always less. Please try to understand my problem. I have to cover the syllabus within the scheduled time. I have already discussed illustration number 2, point number 2. A company signed an agreement with the employee union on 1st of September. That I have already discussed. Please look at page number, sir. Note the number of PDF, sir. Okay, I would like to show check that. Okay. This is given as page number 1.7. Okay, beta. That's good. 7,50,000 has come. Irel. Like 50,000. Yes. Additional wage liability of 7,50,000. Exactly, beta. This has come from here. This revision has been made from 1st of September 2002. And this revision has been made on 1st of September from 30th of September retrospective effect. So revision of wages is made from 30th of September 2011. And what is the revision? The revision is this would cost the company an additional liability of 5 lakh per annum beta. So 5 lakh per annum means how much will be for 1.5 years, because we have to on 31st of March 2000. See here it is 2013, because we are preparing accounting in of 2012-13. So on 31st of March 2013, how much period is available with us? It is 1st of October 2011 to 31st of March 2013 beta. So it is 1.5 years. So 5 lakh is the liability for 1 year. How much will be for 1.5 year? 5 lakh into 1.5, that is 7.5 lakh. Is that clear, beta? Hero, is that clear? Pooja, your issue was 1.13. Okay. 1.13. Yes. You have asked a query. Note in page number 1.13 at the bottom. Student may provide a suitable note. What kind of note should be given, sir? Okay. There is there is no such item as exceptional under AS5 and schedule number 3rd of the Companies Act. However, the same has been used for better understanding of requirement. Student may provide a suitable note in this regard in the examination. But whenever we have to explain anything which we think that it is not understandable otherwise to the examiner, then we should have to give a note. That he wants to explain you. Nothing else he is interested to explain you. Whenever you think that this may not be understandable to the examiner, you will have to give a note. This is the only thing which has been mentioned here. You need not to take it so seriously. Okay. We are explain the solution is done. Yeah. Now in AS7 I am coming. I think AS5 is covered. AS7. In AS7, I would like to review AS7 once again so that some students, if there is any problem, they may see it. But this review will be on the basis of the queries which will be raised by the students. That will be a better understanding, because otherwise reading a AS is not giving us too much understanding. Instead, if we will discuss the concepts or the issues in that AS. So beta, I would like to ask you to send me the queries of AS7 so that we can better understand and we can better discuss on it. Karthik Gupta, it is written that in AS7, it is written that revenue is recognized to the extent of contract cost. Does that mean that when whatever cost is incurred in that year equal to that, the revenue should be recognized, where percentage method is not applied? Because if it is so, then the adjustment in example number 2 should be the contract price shall be recorded as 1 lakh, reimbursement plus 10%. Please explain what does it means. Very good query. Come to example number 2. Example number 2 of AS7 bit. Very good examples are given in this AS. I suggest you to once review the AS in full. Don't go for the presentation only, because this graphical presentation is just for understanding. But to clear exam, you must have to read this AS in a proper detailed way. Whatever is given to you in your IC module, you should have to understand it. Only then you will get good marks. So beta CX Limited commenced a construction on 1st of April. The contract price was cost plus 10%. The company incurred 1 lakh, of which 90,000 is reimbursable. The further non-reimbursable cost to be incurred to complete the contract is estimated as 5,000. The other cost to complete the could not be estimated reliably. So beta, many things are to be seen in this question, because whenever you're solving the question, you must have to see many things. One thing is you should have to understand how to calculate your contract revenue. Second is how to calculate the contract cost. So your requirement is contract revenue. Write it down with you. Second is contract cost. Third is future profit or loss. Future profit or loss. Whatever future profit or loss you will earn from. If we are expecting that we are going to suffer a loss from this, then obviously it will be a problem. But in this case, it is very good, because here the concept is cost plus contract. In cost plus contract, we are not going to suffer any loss. So this is a very good point that in this question we need not to go for that stress. Yeah, profit can be considered only and only when it is going to be earned by us. So here it is very much clear that we have incurred 90, here it is given, we have incurred, the company incurred 1 lakh, of which 90,000 is reimbursable. Why? There may be any reason. We can't the contractee is not going to reimburse 1 lakh in full. So we have incurred 1 lakh, that is our problem. But we are unable to explain it or we are unable to prove it to our contractee yet. If we are unable to prove it to contractee yet, obviously this will be my loss of 10,000. So that he have estimated. Construction cost is 100 lakhs till date, but my earning till date is how much my earning? I can prove only 90 lakhs, and 10% is my cost plus contract is there, so my income is 10% that is to be added. Maximum earning in till now is 99 lakh, where I have incurred 100 lakhs. So it means for yet we have to incur further amount. He says to the further non-reimbursable cost means till now whatever is going to be reimbursed, that is a separate issue. In future also we have to incur 5,000 rupees which is not going to be reimbursed. So my future, now prudence concept comes into the picture. Prudence concept tells us if we are expecting any loss in future, then it is to be provided for now. So it means for rupees 5,000 will be incurred in future. So for that provisioning is to be made because this loss is going to be occurred in future. So for this we have made a provision, profit or loss account debit to provision. Now it means for total 105 will be my cost, whereas my income is 99. So net loss is 6 lakh. So that is to be entered in the books. So it is 100% correct. I assume it is clear now. AS7 page number 1.22, it is written that revenue is recognized. Yes, Karthik, one more query is there on 1.22 page number. 1.22. Yes. It is written that revenue is recognized to the extent of contract cost. Does that mean that whatever cost is incurred in that year equal to that of revenue shall be recognized? Where percentage completion method is not because it is so. I have already discussed now. Okay, I have asked a question twice regarding here. Please ignore the later if already addressed. Okay, Peter. Pooja says thanks. Hiral says thanks. Thank you to all of you who are raising so much good queries. Contract revenue is same as contract price. Exactly, beta. Contract revenue and contract price is same. But contract revenue to be recognized as on the date is always different from contract price if the contract is not yet completed. Contract revenue meant for the revenue to be recognized till now, and contract price meant for the total contract price. So why considered 10,000 as loss? It may also be considered as debtor by recognizing full 1 lakh as revenue. Please refer to the text just below above the example number 2. Example number 2. Ten lakh, I'm assuming that you are talking about this 10 lakh, 100 minus 90. Actually, he says this 10,000 cannot be reimbursable. Means this actually what happens whenever we are manufacturing any, we are constructing any building, then what happens practically? Practically, we are our contractee has already mentioned us that whatever amount you have to reimburse from me, you have to prove its bills. You have to provide me the bills for the same. Now, when I'm constructing, I'm unable to arrange bills of rupees 10,000 due to the reason that the work is going on and I have lost those bills or I am unable to arrange those bills. Due to that reason, it is non-reimbursable. We are not going to reimburse it. So this payment will not be received to us in future also. Due to that reason, 10,000 has been left. that is a loss to me, that is to be borne by me, that is not going to be reimbursed in this case. Due to that reason, he says it is not going to be reimbursed. So it cannot be assumed as debtor. We can assume only that amount as my debtor, which is going to be reimbursed. So is that clear to everyone, beta? Assumes AS7 is clear to everyone. A quick revision of AS7 we may do, starting from the beginning. Yes. To understand it in brief, first of all, what are construction contracts? Discussed that construction contract include construction of single asset, combination of assets which are closely interlinked, and any service relates to construction of assets. Destruction of asset or restructuring of asset will also covered under the head construction contract. Two types of two methods are there how we will charge against the construction contract. One is fixed price contract, second is cost plus contract. In fixed price, we will be able to get total amount fixed for the contract, whereas in cost plus contract, we are unable to get the fixed amount in the beginning. Obviously, whatever cost we will incur, and that we will be able to prove contractor is reimbursed for allowed or otherwise defined cost, plus percentage of these costs or a fixed fees that we have already understood. If the outcome, he says, if the final outcome of the contract, obviously we will not be able to wait till the completion of the contract. Every year we have to close our books of accounts. I mean, we have to recognize our profit and losses in that case. So if you have to calculate profit or loss at the end of every year, we must have to make some estimates if the contract is not yet completed. If the contract is completed, then there's no problem at all. Those contracts which are not yet completed, the problem is their own. So if some contract is not yet completed, then how to recognize its contract revenue, how to recognize its contract cost, percentage of completion, that is the point which is going to be discussed in this topic. Final outcome of the contract can be estimated reliably, then there's no problem. We will have to calculate our cost and revenue as per percentage of completion method. So we will discuss it according to this method what we have to do. But in case it is not going to be estimated reliably, then revenue should be recognized to the extent contract cost incurred, of which recovery is probable. Just in a simple example, we have understood that if I have incurred rupees 5 crores till date, but to the from the point of view of contracting, we are able to prove only that we have incurred 4.5 crores, not the 5 crores. And that I may recover. In that case, 4.5 will be recognized as a revenue, or 4.5 plus whatever formula is there. If cost plus contract is there, obviously in that we will make addition of whatever percentage of profit we may earn on it. And to recognize the contract cost should be recognized as an expense in the period in which they are incurred. So there's no worry. Even expenses are incurred and the outcome will come in the next year. Even then expense will be entered in the current period only. That is not going to be kept pending, because do not anticipate gain, provide for probable losses. Even if we are expecting that we will suffer a loss from this contract after 5 years, even then we will write off that loss now by creating a provision. If we are expecting a loss will occur to us after 5 years, because when the contract will be completed, we will have to suffer a loss of 10 crores. So that 10 crores will be provided for now. That is allowed. Whatever contract cost we have incurred till date, that will be provided for now, that will be entered now, that is allowed. Any expected loss that we have already discussed? So AS7 prescribed condition under which the outcome of a contract can be estimated reliably. That we have discussed. Here, this presentation is available on ICA BOS app. I have personally checked it beta. If this is not available to you, I may help you. From where I have downloaded it, you may also check it from there. Aditi, escalation clause, I would like to define it for you also before going forward. Escalation clause meant for what? I have taken a contract for rupees 100 crores. Now, with this is a fixed price contract. With this, an escalation clause is there that if material which is to be used for construction of this particular building or project, if its material cost will increase, then I may charge that. This is the escalation clause. Charge from contracting. So material cost incurred at the end of first year is 50 crores, which is more than normal by 10 crores. Means otherwise it is to be incurred 40 crores. But due to increase in prices, I have to incur 10 crore extra. So that 10 crore will be added to my contract value. So my contract value will be 100 plus 10 crore. That is 110 crores. So it will increase by 10 crores. So this is escalation clause. The price will automatically increase to 110 crores. So if there is any increase in material cost, then it will be charged to the contracting. It has been specifically mentioned in the contract. So this contract, whatever this word is, this line is, this is an escalation clause. Escalation meant for escaping clause. Sir, provision is created for known liabilities. How the future estimated cost is creating provision. Future, बेटा जो फ्यूचर में हमने खर्चे करने हैं ना, एक्सपेंसेस करने हैं, उसकी कोई प्रोविजनिंग नहीं हो. बट फ्यूचर में अगर हमें कोई लॉस होने जा रहा है, चाहे उसके एक्सपेंसेस अभी हमने नहीं किया, एक्सपेंसेस फ्यूचर में करेंगे, बट एक्सपेंसेस करने के बाद नट शेल में हमें लॉस होना ही होना है. दिस इज कंफर्म्ड बिकॉज कई बार हम लोग कॉन्ट्रैक्ट ले लेते हैं और कॉन्ट्रैक्ट को बीच में छोड़ने से हमारी रेपुटेशन सफर हो. तो ड्यू टू दैट रीजन हमें कॉन्ट्रैक्ट तो कंप्लीट करना पड़ेगा. अगर हम कॉन्ट्रैक्ट कंप्लीट करेंगे, अभी हम लोग उस कॉन्ट्रैक्ट पे काम कर रहे हैं, मान लो अभी कॉन्ट्रैक्ट मैंने इसी साल लिया, अभी उस पर काम भी शुरू नहीं करा, अभी मुझे पता लग गया कि मैंने 100 करोड़ का कॉन्ट्रैक्ट लिया, बट मुझे उस पर 120 करोड़ रुपीज का खर्चा करना पड़ेगा, बट मैं इस कॉन्ट्रैक्ट को छोड़ भी नहीं सकता. तो 20 करोड़ रुपीज मैं इसी साल प्रोविजन क्रिएट कर सकता हूँ. ये अलाउड है बिकॉज डू नॉट एंटिसिपेट गेन्स, प्रोवाइड फॉर प्रोबेबल लॉसेस. ये प्रूडेंस कंसेप्ट कहता है एंड दिस इज प्योरली अलाउड. That we are discussing. Non-reimbursement amount always covered by a provision in contract. Non-reimbursement amount always covered by a provision in contract. No, here, but we are discussing that if there is a non-reimbursement cost, then it is to be charged. It is to be if it occur in future, obviously it is a future loss. So we have to provide for that loss now. So due to that reason, we are creating a provision. Presentation is available in subject-wise capsule section. So I will show you wherever it is available. I will show to everyone. Escalation means to increase the cost of product. No, escalation means contractor will get the amount of increase in product cost. Escalation means the contractor will be eligible will be reimbursed with the extra cost, if any, incurred by him due to the increase in material cost, due to the increase in labor cost, or due to increase in any particular cost, whatever is mentioned in escalation clause. Escalation clause varies for contract to contract. It may be mentioned in the contract that if prices will increase, we will be you will be reimbursed by 50% of the increase. In that case, I'll be eligible to get only 50%. If it is mentioned that if labor charges will increase, you will be able to get that increase only. So in that case, if material price will increase, that we can't reimburse. Obviously, we can reimburse only the labor price. So whatever is mentioned in the contract, that is to be taken care of. So in fixed price contract, total contract revenue can be measured reliably. Means outcome of the contract, when it is will be assumed that the outcome of the contract can be estimated reliably. In case of fixed price contract, total contract can be the revenue can be measured reliably. If it happens, only then we will say that it is possible. It is probable that the economic benefit associated with the contract will flow to the enterprise. Means we will be able to get that amount. If we are not expecting that that amount will be received to me, obviously we are unable to. Both contract cost to complete the contract and the stage of contract completion to the reporting date can be. For this, you may better refer to an example given with this. So these are the normal things, whatever is mentioned. I think this is very much clear to everyone, not required to be discussed. Contract revenue is what obviously amount in planned at the beginning plus incentive will get later on, or if any additional work I have received or any claim is there that is to be added. Cost means whatever directly charged, whatever is to be allocated to us, whatever to be charged to the customer under the term of the contract, whatever the cost is. And if any change in estimate is there, that is to be adjusted accordingly. If there are a number of contracts which are to be treated as, if I have received number of contracts, then they may be treated as single contract or a multiple contract. It depends upon the circumstances. What are those circumstances? If separate proposal is submitted for each asset, then it will be treated as a separate contract. If single proposal is submitted for all the contracts, it will be a single contract. Then each asset has been subject to means whenever we have taken that contract, those contracts we may say, then they have been negotiated separately. That this contract will be charged rupees 1 crore, this contract will be charged 1.5 crore, this work will be charged 2 crore. So they have been negotiated separately. Or if they, in that case they are assumed as separate contracts. But if we have negotiated all the contracts as a single contract, that these all will be charged rupees 100 crore, then obviously they will be assumed as a single contract. And third most important thing is, even this has happened that we have calculated them, we have taken them separately, separate proposals are there, separate working is there. But if their cost and revenue cannot be identifiable separately, then they will be treated as single. But if their cost and revenue can be easily identifiable separately, then they will be assumed as multiple contracts. So this is to be kept into mind. This may also come into the exam. So if we have received group of contracts, that is interested to tell you, if we have received group of contracts, now these group of contracts, even from a single customer or from multiple customers, they may be treated as a single contract. But in case these are negotiated as a single package and they are continuous contracts and or in continuous sequence performed concurrently, means we are working on all the contracts simultaneously because they are correlated with each other, or they are interrelated in this way that we can't work them on a single contract. We can only earn overall profit margin by assuming them as a total contract. So in that case, they will be assumed as a single contract. That we have already discussed. But if in case we are working on a contract and an additional contract is received to me for the purpose of making an additional asset, then it will be treated as a separate construction contract when they differ significantly in design, technology, or function, or assets covered by the from the assets or assets covered by the which they are different from the original asset. And second thing is whenever we have fixed the price, that price is not correlated with the previous contract. That in the previous contract your price was 5 crore, now we'll pay you 1 crore accordingly. That is not a part of consideration. Obviously, we have fixed that price as a new contract or as a separate contract. So in that case, it will be treated as a separate contract. Now, what is to be disclosed in financial statement, which is very important in this case? Generally, whatever contract revenue recognized during the period is to be shown, and whatever method is used to determine stage of completion, that is to be shown. Means we must have to show this thing, how we have calculated the percentage of completion of contract, and then specific for contracts in progress, whatever contracts are running in progress. So we have to show separately that how much advance is received on those contracts, how much amount is retained by the contractee. Means he has agreed that the work has been done for this particular amount, but the amount he has not paid is called retention amount. So retention is to be shown separately. Also, whatever is due from contract customers, means whatever we have to we have been able to get from the contractee later on, amount is due but not received. So that is due from customer, that is to be shown as an asset, and whatever due to customers means whatever is payable to him, that is our liability, that is to be shown. So this is a disclosure requirement in this case. Assumes beta AS7 is clear. Please tell me. I assume that the AS7 is very much clear to everyone. Any doubt to anyone? I've tried to review it for all of you. In AS7, changes in estimate states that a change in contract cost or revenue. In AS7, changes in estimate states that a change in contract cost or revenue then is disclosed as per AS5. Please explain this. Okay. Changes in estimates. Yeah. Basically, then given in AS4, in AS4 we have done change in estimates, not in AS5. Let it be very much clear, beta. Second thing is change in estimate states that a change in contract cost or revenue then is disclosed as per AS5. As per AS5, here it is not mentioned as per AS5. Yeah, it is given in detail. I have already read it earlier also. I know it very well. So due to that is I have shown it for you. The percentage of completion method is applied on a cumulative basis in each accounting period to the current estimate of current revenue. That is better understood by an example also, which has been given in this AS. He says that we have estimated that our 60% of the contract is completed. Later on, we think that no, it is not 60%, it was 50% only. that he is going to discuss with you. In each accounting period, the current estimate of current revenue and current cost means at the end of second year, we estimate that how much total contract is completed till date. Therefore, the effect of change in estimate of contract revenue or contract cost, or the effect of change in estimate of the outcome of a contract is accounted for as a change in accounting estimate as in accordance with AS 5. The change estimate are used in determination of the amount of revenue and expenses recognized. Okay. Just a moment, better wait. I would like to guide you for this purpose also. Okay. In AS 5, we have done it. Change in accounting estimate. Yeah. So that we have already discussed. In case there is any change in accounting estimate, how it is to be done. Do you remember that? Whenever there is a change in accounting estimate, you will have to disclose it from the current date, not from the previous estimates. If there is any change in the previous years, due to the reason of change in accounting estimate, there is no problem at all. You may disclose it in the current year, and its effect should be shown from the current year onwards only. That we have already discussed. Maybe that is given here somewhere. Yeah. This we have already discussed, that an estimate may have to be revised if changes occur in the circumstances based on which the estimate was made. So what do you have to do? The revision of the estimate doesn't bring the adjustment within the definition of an extraordinary. So accounting estimate by their nature that may need revision. How to show it? Here it is given. Yeah, this has been given. This is your important point. This is given on page number 1.15. The nature and amount of change in accounting estimate which has a material effect in the current period or which is expected to have a material effect in the subsequent period should be disclosed only. If it is impracticable to quantify the amount, this fact is also to be disclosed. That is it. बस बेटा करना क्या है आपने, जो आपका चेंज इन अकाउंटिंग एस्टीमेट है, जो आपको लगता है अकाउंटिंग एस्टीमेट में चेंज हुआ है, मान लो आपके एसेट की वैल्यू पहले लाइफ जो है वो 10 ईयर्स, अभी आपको लग रहा है नहीं उसकी तो टोटल लाइफ ही 8 ईयर्स है, तो आपने इस साल से डेप्रिसिएशन को चेंज करना है और उससे जो चेंजेस आपकी आ रही हैं इस साल में और अगले आने वाले सालों में, वट एवर चेंजेस यू आर एक्सपेक्टिंग, वो सारी चेंजेस जो अमाउंट बनती है वो सारी कैलकुलेट करके आपने उसका डिस्क्लोजर देना है. दैट इज द रिक्वायरमेंट, नथिंग एल्स इज. Is that clear? But Hiral, we have to do ourselves. All illustrations is to be done by the students. Let it be very much clear. I may take doubts only because if we will discuss the complete AS and all the illustrations, what you will do? If you will not do anything, you will be unable to do it in the exams also. But you have to do yourself. I will give you the idea, I will give you the vision, I will give you the brief introduction of each and everything. Detail is to be done by you. All illustrations are to be done by you. I will take doubts. Only then your analytical mind will open. Otherwise, it will always remain closed. Accounting standards are not to memorize. Accounting standards are to be done to understand the concept. You have a conceptual understanding of that. So for conceptual understanding, you have to read the years, you have to go for the illustrations. Come to me with doubts. I would like to clear your doubts. So it's your duty to do it. Page number 1.28, study material beta. But for that, please tell me what you are interested to know there from 1.28. Explain disclosure about progressive billing. Progressive means whatever future billings we have to make. Retention. Retention means whatever amount is due to contracting, means he has agreed that the 80% of contract is completed, but he has paid only for 70%. 10% he has retained. That is called retention beta. Advance means whatever amount he has paid in advance. Work is not yet completed for that amount, but advance is paid by him. That is called advance. With illustration number 1 on page number 1.30. Okay. One point 28 first. Sonika, what you are interested to do it from here? That we have already done, change in estimate now. Already disclosed you each and everything. Is there any doubt in this, Sonika? There are only two illustrations available for AS7 from where we can do more practice. But for AS7, you have the complete chapter contract cost in your cost accounting. So whatever is in the contract cost chapter, whatever in the construction contract chapter is there, all that is same here. So there's no worry. You may do more practice in your cost accounting. Interlinking of standard are made where it is necessary. Everywhere beta, whenever you are going to give answer relating to any AS, you must have to interlink with the AS, you must have to interlink with the concept on the basis of which you are giving the answer. So both things are mandatory to get good marks. Tell the illustration number 1. Okay, illustration number 1 beta. A firm of contractor obtained a contract for construction of bridges across river Revati. On 31st of March, following details are available. 2011. Total contract price is 1,000. Work certified for the contract 500. Work not yet certified for the cost incurred 105. Estimate future cost to completion 495. Progress payment received to be received 140. So this is all clear. How to do it? See, in the given case, first of all, we have to understand that how much contractee is agreed that the work is completed. Contractee. So according to contractee, this work is certified. And also progress payment is received. This work is certified beta. Is that okay? 500. And this work is not certified, so there's no issue. This is not agreed by the contractee. Contractee have agreed that the work of 500 is completed. But this is the cost incurred by us. So this is now not our sale price. What is our sale price? Till date, he has paid us 400 rupees and 140 he is going to pay. So it means for till date, 400 is received, 140 is yet pending. So this is the amount agreed by the contract. Whenever we are talking about a total cost, how much cost we have incurred till date? We have incurred 605. But in future, we have to incur 495 more. So total cost is 605 plus 495. How much it is? 1100. Wherever the contract value is 1,000 only. So it means for we are going to suffer a loss of 100 crore in case we will complete the contract. This is very much clear to everyone. How much is the total cost? Bit of 500 we have already incurred and certified. 105 we have incurred and certified and not certified. 495 is yet to be incurred. So total cost is 1100 for the given contract. Whereas our contract price is only 1000 crore. So we have to suffer a 100 crore of loss in future. So this 100 crore is to be provided for now. One thing is very much clear from this case. Retention amount is how much? 140. Because he has paid us 400. 140 is yet pending. So this is the amount which is retained by the contracting. This is also clear to everyone. Let's see the solution also so that you can understand in a more better way. So 100 crore loss is clear to everyone. Yeah, this is also good thing. How much work is completed till date? So according to us, work is completed for 500 plus 10. This is our estimate. So according to us, 605 cost has already been incurred. If we'll see 605 is the cost till date, whereas total cost of the contract is 1100. So this is a formula for calculating percentage of work done till date. What is the formula? Write down the formula. Percentage of completion of work is equal to total cost incurred till date certified plus not certified. You have to take both. Oblique total estimated cost of contract. So in the given case, we have seen that 500 is the cost incurred till date, which has been certified. 105 is the cost incurred but not yet certified. So total cost incurred till date is 605. Estimated cost is, we have already calculated 1100. So how much is the percentage of contract completed till date? That is 55%. So how much revenue we have to recognize that we are going to earn according to the work done till date? That is based on this. Note it down first, then I will go forward. So how much revenue you have to recognize? That will be 55% of 1,000, 550 lakhs. So amount due from customer or due to customer we have to calculate. That is a very simple way. For that, you may better prepare your contractee account and contract account. You know it how to prepare it. You can calculate by that way also. That is also very easy. There's no problem at all. You have already done it in construction contract chapter. We may take accordingly also. We have checked that 550 lakh we have to recover from the contracting. So here it is given: contract cost plus recognized profit minus recognized loss. Contract cost is how much? 605 plus recognized profit. So any kuch we have to go for the loss. It will be 100. So that we have deducted, minus progress payment received plus progress payment to be received. That is, you may go it by that way, whatever you know it very well. You may do it. Just a moment, I'm going to give you a good idea from where you can do it very easily. Basically, you have to remember this formula because this formula is very good. Whatever cost we have incurred till now, plus whatever profit or loss we have to bear, that we have adjusted. Because that is not going to be reimbursed if there is any loss. That will be borne by us. So it means for out of 605, 100 is our loss, which we have to bear. So till now, we have incurred 505, which is to be recovered. Because 100 is our loss that we have to bear, that we have bear now. And how much we have to get? We have to get 540. That is very much clear to everyone. So to that reason, he was saying that 35 lakh is amount due to customer, means it is payable to customer. Due to customers mean it is payable to customer. It is not receivable from customer. Otherwise, actual receivable amount is 140 lakh. That is very much clear because that has been already specifically mentioned in the question. So this is a way of presentation, way of calculation, because in this case, 100 lakh is our future loss. You may do it in the way I would like to give you here. In balance sheet, what do you have to do? For that purpose, first of all, you have to check that how much is your amount receivable from amount received from contracting. Obviously, this is the amount received from contracting is 500 lakhs, 400 lakhs. Sorry. It is 400 lakhs. I would like to make it easy for you. That's the point only. Plus amount receivable. That is 140 lakhs. So it is 540 lakhs in total, which we have to recover. Against that, how much expenses are incurred by us till date? Whatever expenses we have incurred till date. Till date, we have incurred 605. That is given to us. So this is our loss. We can see this is the expenses incurred by us. We can say that this is the amount already paid by us. Plus whatever future expenses we have to incur, future loss we have with us. Here it is given 400 plus 140. Just a moment. I would like to see the question once again. There will be some. Yes. Till date, we have received 400. 140 is yet to be received. You may do it like this way also. That work not yet certified is 105, which is pending. So if we'll go for the contract accounting in a proper way, then we can easily get it. Then we can easily get it, because in that case it will be according to that. 140 is amount receivable. That is clear. I would like to give you some shortcut for this if it is possible. I would like to make it some calculation for you in the way you can better understand it. I'll give it to you within a day. In the next lecture, I will like to try to give you, or I will upload it in your app also. If it is correct, I think it may be checked also whether it is correct or is there any error, because I'm not clear whether it is 100% accurate or is there any error, because it is not solved. So let's go for the next stage. It's better. This we will discuss it later on. Before that, one query is there: how to get more questions. These are the questions given to you. Just see your ici.org. In this, you will have to go into that student section, BOS Knowledge Portal. Visit BOS Knowledge Portal. In that, suggested answers are given to you better. So I would like to suggest you to go for these questions. Suggested answers, intermediate. Here, paper 5 advanced accounting is given to you. In that, all 5 exams are given to you: December 21, July 21, January 21, November 20, January 21, November 20. So whatever is given to you, you may do it from here. You may see it in December 21. Yes. From here, you may do the question. Like this, it is given question number 1: as per provision of AS4, you are required to. This was the question come into your exam. He says question number 1 is compulsory question. Candidates are also required to answer any 4 questions from the remaining 5 questions. So first is compulsory, and then you have to do, that is of well, all the question are of 20 marks each. You have to do total 5 questions. First is compulsory, and in that AS will come to you. So AS is always compulsory. Then candidates are required to answer any 4 out of the 5 remaining questions. Now, as per provisions of AS4, you are required to write, state with reason whether the following transactions are adjusting or non-adjusting in the books of new limited. So equity dividend for the year 2021 was declared at the rate of 7% on 15th of May. Wherever he says accounts of the company were approved by the board of directors on 10th of July 2021. So whether this is a equity dividend is an adjusting event or not, I'm going to ask from you. Tell me, is it an adjusting event or not? Exactly enough, Sonika. Suggested answers, revision test papers, RTPs, previous year questions, and MTPs are all sufficient for you to clear the exam, to crack your exam. And one thing is very much important, suggested answers and previous year questions are one and the same thing. Suggested answers and previous year questions are not different from each other. Whatever previous year question papers are there, those have been solved by the ICI by the name of suggested answers. So these are one and the same thing. Now send me, it is a non-adjusting event. Exactly, beta. Very good. It's a non-adjusting event. Very good. On 5th of March, 53,000 cash was collected from a customer but not deposited by the cashier. This fraud was detected on 26th of June. So fraud has been occurred before 31st of March. But but it has been detected before approval of accounts by the board of directors because it is on 10th of July. Tell me, it is an adjusting event or non-adjusting event? Point number two, adjusting or non-adjusting? Aditi, yes, sir, it is adjusting as it is declared after 31st of March. No, beta. Aditi, it will be adjusted event only and only if it is declared before 31st of March. Otherwise, dividend cannot be an adjusting event because dividend is yet proposed. It is not yet paid. Okay. And it can never be paid if it is declared after 31st of March because it is to be approved by the board of directors and it will go to general meeting. And in then general meeting, it will be finalized and paid. So it is just a proposal and proposal cannot be adjusted. You may see the answer also. Disclosure is required exactly. Fraud is an adjusting event as it relates to balance sheet date on closing date. Exactly, Akashnil, you are correct. Very good. Non-adjusting. The non-adjusting first is non-adjusting, second is adjusting event because fraud is already existed on the balance sheet date. And we come to know before the closing date. Before the closing date, we come to know. No? Before the closing date means before the approval by the board of directors. So we will have to adjust it. One building got damaged due to occurrence of fire. Loss was estimated to be 181 lakh. This has been happened after 31st of March, but before approval by the board of directors. Is you must have to write three adjusting or non-adjusting. It is third part, so must write three adjusting or non-adjusting. If dividend is proposed before 31st of March, is it an adjusting event? It will be an adjusting event if it has been paid before finalization of books of accounts. Declared before 31st of March and paid before finalization of books of accounts. Obviously, it will relate to previous year in that case. Because dividend is normally provided for in the next year and paid after that. Three non-adjusting, very good. Because in this case, it required disclosure only. It is a significant event, so it will require disclosure only, but it is not a adjusting event. So you can do it very easily. But how to write the answer, which is very important, see the answers. As per AS4, contingencies and events occurring after the balance sheet and event occur after the balance sheet date may require adjustment in the reported value of asset, liability, expenses or incomes if such event relates to condition. Like this, you have to write the answer. Fraud of the accounting period is detected after the balance sheet date but before approval. So it is necessary to recognize the loss amounting to rupees 53,000 should be adjusted in the accounts of the company. So all that is to be taken care of. So in this way, you have to give the answer. You may check the answers later on. Okay. So this way, how you will have to do these points. Also, you may go for the RTPs, which is given here. Yes. Revision test papers. Intermediate, paper 5. Do all the RTPs. Not one, do all the RTPs, beta. I suggest you. And this is all to be done after doing the AS. When will you do the AS, particular AS? And then you may check it out. Is there any question relating to that? You may do it. It is available from the market also. You may get uh, this from the market. There is a previous year question bank is normally available in the market. You may take it. And that is also chapter wise. That is also AS wise. That will also give you the benefit that we have done the question paper and then we have done the AS. Then in related to that AS, we have done the previous year questions. That will give you more and more practice, and you will have a confidence that you can do it in your exam also because you have seen that what has been come into your exam. Once you will see it, it will be very easy to do it. So then there is a mock test series. You have to do this also, mock test papers. These are the series given to you. So these are also good for you. So these will obviously add to your extra question bit. So after the break, we will go for the next years. Till then, goodbye. Ashok, you have a break for 10 minutes. Welcome back after a break. So let's start with the next AS7 AS7 के बाद next आ जाता है AS9. AS9 is an important AS from examination point of view also. If we'll see that this AS has its concept which is based on profit or loss account. The name is itself very much clear, revenue recognition. What is revenue recognition? That is normally known to everyone, but meant for revenue is beta. Revenue meant for whatever we earn from our business. That is called our revenue. And how to recognize that revenue in our books of accounts, how to enter that in our books of accounts, that is the base, that is the concept of this AS. This 9 is mandatory for all enterprises. This is the most important thing because number of AS are applicable for corporates only or for special organizations only. But this AS is somehow different AS because it is applicable to every enterprise. So it deals with the recognition of revenue in the profit or loss account and the specific items which is to be covered in this. That will be the revenue arising from the ordinary activities, whether that is sale of goods or rendering of services. If you are doing business, obviously it will be sale of goods. If you are doing professional services or any other type of services, then rendering of services, giving of services. And the most important thing, third, used by others. Others means if we have given to someone of enterprise resources, means our resources. We have given our resources to someone, and on that basis, I'll get interest, royalty, or dividend. So, 5 items are to be covered in this year. One is sale of goods. Second is one is sale of goods. Second is rendering of services. Third is interest. Fourth is royalty. Fifth is dividend. We have given our amount to someone, and against that we are receiving interest. So this is obviously an income for us. And in that case, if we have written a book for someone or given anything to someone on which I'll get a royalty, this will be a formula which may be given to someone. Against that, I'll be able to get royalty. And the next thing is, if we have invested in shares of any company, then obviously we will be able to get dividend from there. And some are specifically excluded from it. That is from construction contract AS7, hire purchase lease agreement AS19, government grants AS12, insurance companies Insurance Act, because these are covered there. I may write it for you. This is covered in AS7, so not covered here. AS19, not covered here. AS12, not covered here. And insurance companies Act. So these are not to be covered here. Also, some more revenues are not covered here. Means this is a very good thing. He may ask a query from you that whether it is covered in AS9 or not. You may give the answer and get 5 marks. That's a very good thing for you. Because if we are asking for something about insurance companies, that is not even covered in our complete advanced accounting. So obviously, just giving that answer, you will be able to get 5 marks. That would be a good thing for all of you, beta. Then some revenues are not to be considered. That is, if we are getting any revenue from disposal of non-current assets, that is, if we have received revenue from disposal of, means sale of, obviously, and unrealized gain means which is not received to us, that is revaluation of our assets. We have revalued our assets and the value has been increased. In that case, that will not be recognized in AS9. Then unrealized holding gain from the change in the value of current assets. Means because that is covered in AS2, we know it very well. If there is a change in the value of our inventory, that is covered in AS2. Then natural increase in herbs and agriculture and forest product, that is also not covered here. And this type of questions comes into your exam. What will be the treatment according to AS9 for the increase in herbs and agriculture and forest product, and we received any revenue from there? So, but this is most important. This is an unrealized holding gain. This is not the sale of current assets. If we are getting any revenue from sale of current assets, means current asset means goods. We are selling our goods. That is to be considered. That is to be taken as a part of this particular AS. Then sale of debtors. We have sold our debtors to someone. That is also a part of sale of goods or sale of we are getting revenue from there. That is not a problem. But this is the unrealized gain. Means the value of goods lying in our godown was rupees 1 crore. We have purchased it for 1 crore. Its value has increased to 1.5 crores. So that is not to be taken into consideration. We are doing agriculture business. In that case, after sowing seeds, after sowing seeds worth rupees 10 lakh, I have sown seeds worth rupees 10 lakh. Now, herbs or the agriculture product or the forest product has increased its size, and now it can be sold for rupees 25 lakhs. So when it will be sold, it will be a sale of goods. There's no problem. That will be taken part in AS9. But until and unless it is not sold, we can't revalue it and take that as our income. Let it be very much clear in our AS9, because AS9 doesn't cover this. Then foreign exchange rate profits or losses, that is not covered here because that is covered in AS11. Separate AS is there for any benefit or loss in foreign exchange, that is covered in AS11. Then discount on payment to creditors or bank or any other liability, that is realized gain. Realized gain means the gain which we have earned. So we have earned a gain by way of discount on payment to our creditors or any liability, because it has been mentioned discharge of an obligation at less than its carrying amount. So whatever its carrying amount is there, it is carrying its carrying amount in our books is 50 lakhs. Any liability, and we have paid it for rupees 40 lakhs. So we have received a benefit of 10 lakh, but this is not to be taken care in AS9. Is that clear, better? Unrealized gain resulting from the restatement of carrying amount of an obligation. I already mentioned that if any liability is there or any obligation is there, if it is actually paid off and we got the benefit, that is not to be taken care of. Also, if there is unrealized gain, means it is just revalued. We have made a revaluation of our liabilities in our books of account. Then that will not be taken care in AS9. Here, the revenue meant for what? It meant for any inflow, gross inflow, not the net inflow. Means if we have received 10 lakh as cash, out of which we have given a commission of 10 crore as cash, and we have given a commission of 1 lakh to someone, then revenue is 10 crore, not 9 crore and 99 lakhs. It is not our revenue. Our revenue is 10 crores. That is gross inflow of cash receivable or other consideration. Means if we have received shares or anything else which has money or money's worth in the course of ordinary activities of an enterprise, from the sale of goods, from the rendering of services, or from the use by the others of enterprise sourcing, yielding interest, royalty, or dividend. So remember 5 things. Speak it out. I'll discuss with you beta each and everything: interest, dividend, and royalty. Every point will come step by step. So wait and watch. That is always better. So sale of goods. What means for sale of goods? Now I'm going to define it. When the requirement as to perform set out in below paragraph are satisfied. What is the requirement? If at the time of raising any claim it is unreasonable to expect ultimate collection, then revenue recognized to be postponed. Means any amount which is confirmed to be received from our sale is our revenue. If any amount is not yet sure that whether it will be received or not, that will not be taken into consideration. So conditions are there. Seller of the goods has transferred to the buyer the property in the goods for a price if goods are lying with us, but bill has been raised. In that case, we can't assume that it is our sale because revenue is not yet recognized. Revenue will be recognized only when the property in goods is transferred. Goods lying with us, obviously risk and reward belongs to us. So risk and reward must be transferred in relation to those goods, and seller doesn't have any effective control of the goods. So goods must be transferred to the buyer, as well as all risk and reward belongs to buyer from that date. Only then we will assume it as our revenue. Same. No significant uncertainty is regarding the amount of the consideration, and also it is very much sure that the payment will be received. If there is any uncertainty that the payment will not be received, payment may or may not be received. In that case, it will not be taken as a sale. It will not be considered as a sale. हम लोगों ने सेल करी, तभी सेल मानी जाएगी जब सेल में हमने प्रॉपर्टी मतलब उसकी जो ओनरशिप है वो ट्रांसफर कर दी है, उसके जो रिस्क है सारे वो ट्रांसफर हो चुके हैं, उसका जो बेनिफिट मिलना है वो ट्रांसफर हो चुका है, और जो उसके पैसे मिलने में कोई अनसर्टेनिटी है वो भी नहीं है, सर्टेनिटी है कि कंफर्म्ड है पैसे पक्का मिल जाएंगे, तभी आपने उसको अपनी बुक्स में सेल मानना है. Assume it is clear to both those who doesn't understand Hindi also and those who understand Hindi only. So I have tried to cover both of them. Rendering of services. So when service will be assumed as rendered, or when the revenue from rendering of services to be recorded in the books of accounts, that is the most important point. This can be done only when service is performed. When you see that the service is already performed, then its revenue can be recognized. The line is only one. Revenue from services is usually recognized as the services performed. जैसे service, whenever service is completed, whatever service we have to provide, जैसे for example, if you see these telephone departments, these mobile companies are providing us services of mobile. So postpaid bills are received to us whenever the services are given to us. So at the end of every month, their service is performed. So their revenue is due. So they may enter it in their books of accounts. There's no problem. So there are two methods for this. One is proportionate capital method, proportionate completion method, and second is completed service contract method. This method of recognition is required only and only if the contract is not completed, if the service is not completed on 31st of March, that is at the end of the accounting year. If the work is completed, then there is no method for recognition of revenue. Obviously, the complete revenue will be recognized. If during the year service is completed, then there is no problem. But if as on 31st of March, service is not yet completed, contract is yet going on, so in that case, how to recognize the revenue? It will be correlated to somehow with the contract costing, because in contract costing we have discussed that the revenue will be recognized on the basis of proportionate capital method or like that. So here also we have to go for some methods: proportionate completion method and completed service contract method. So first method is to be meant for that whatever the work is completed according to us, whatever the work is completed according to us, Accordingly, we will assume our revenue. That is in proportion to that. It will depend upon the proportionate calculation. How to calculate that? We will discuss it. Second is completed service. In this case, we will recognize the profit or loss only and only, or we will recognize our revenue because we are talking about revenue. Revenue from sale of rendering of services only on the completion of the contract. Method where which recognize revenue in the statement only when the rendering of services is completed or substantially completed. Means in this case, if the contract is not completed at the end of the year, then its revenue will not be recognized until the year in which service will be completed. Only in that year, revenue will be recognized. Total revenue will be recognized in that year. So both methods are allowed. This is not allowed in case of you may say goods, but in case of service, it is allowed. It may happen because in number of cases, one thing is very much important while providing services, that your person who is receiving services from you normally make the payment only at the end of the completion of the service, because ultimate outcome is considered only on that date. So due to that reason, we have to use this method if there is any doubt, because he is not interested to make partial payments. Even he will make the payment only when the work is completed in full. So in that case, we should have to go for the completed service contract method. Here it is mentioned, this method is relevant to those patrons of performance, and accordingly revenue is recognized when the sole or final act takes place and the service becomes chargeable. Because before that, we are unable to charge the service even, like installation of a machinery or repair service like that. One thing is very much important. If it is not unreasonable, it is not unreasonable to expect ultimate collection. Only then we can enter sale or a recognition of service or recognition of sale in our books. If at the time of raising any claim, it is unreasonable to expect ultimate outcome, then revenue should be postponed. Means हिंदी में इसका सिंपल मीनिंग ये है कि हम लोगों ने सेल कर रहे हैं, हम लोग गुड्स या सर्विस दे रहे हैं, लेकिन उसके पैसे आने के भी चांसेस कंफर्म्ड नहीं है, तो फिर उसको हम लोग अपनी सेल नहीं मानेंगे, उसको हमने रेवेन्यू को रिकॉग्नाइज नहीं करना जब तक कि उसकी पेमेंट की कंफर्मेशन नहीं मिल जाती. Until and unless payment is not for sure, you cannot recognize revenue in your books either of sale of services or for rendering of services under a proportionate capital method or completed service contract method in all cases. Now talking about interest, royalty, and dividend. What is interest? Interest is normally considered known to everyone that we are giving payment to someone by way of loan or by way of debentures or by way of by any way, whatever the way is, we have given our amount to someone for use, and against that we are receiving interest. So basically, it is a loan normally. So in that case, if we are getting any interest on that particular amount, it is our ordinary activities because we are receiving it in routine in that case. Because if we have given rupees 10 lakh to some businessman or to our employees or to anyone on loan, then obviously we will be able to get interest on that. So interest is a regular process in that case, and it is our revenue income. It will be considered in books only on due basis. Due basis means due basis means I have given 10 lakh to someone at the rate of 10% per annum. In that case, if I have given this amount on 15th of January 2021, then in that case, interest must be, even no payment is received because payment is received quarterly. Interest to be received quarterly. Interest must be entered in the books on 31st of March 21 for 2.5 months, 2.5 months on time proportion basis. This is called time proportion basis. Time proportion means proportionate to the time. No amount is received because the payment will be received only on 15th of, because we have given this amount on 15th of January. So we'll be able to receive 15th of April 2021 first quarter payment. But on 31st of March, while closing our books of accounts, it is purely allowed to enter interest of 2.5 months in our books of account as 10 lakh into 10% into 2.5 divided by 12. So we may enter in our books of accounts. Is that clear? Note it down. So, but sir, uncertainty of discount or bad debts are always there. Then also we recognize it under AS9, because in AS9 you have to recognize sale of service in full without considering any discount or bad debts, because when we are selling the goods, we are not expecting any bad debts or discount. If any such expectation is there, the revenue is not to be recognized. And even we will not sell the goods. If you are an intelligent seller, you must have to consider this thing. If there is any doubt of payment from someone, we will not sell goods to him. So there is no chance. But later on, we may create a provision for the same according to our AS4. At the end of 31st of March, or as on the date of closing of books of account, we normally come to know that this much amount of debtors are there, and there may be a chance that this much amount of bad debts may occur or discount may be given. So accordingly, we are creating provisions. But that is only at the end on 31st of March of, or at the end when the closing of books are made. While doing the business, if we come to know that the payment will not be received, obviously I will not sell the goods. I will not sell the goods. Is there any intelligent seller who sell the goods even if there is a chance of bad debts? So doing audit is an example of completed service contract method. Exactly, beta, this is a pure example. We are doing tax audit, and after completion of tax audit only we will charge amount. Before that, if the work is not yet completed, we can't charge amount. Operating surplus in calculation of natural income in economics. I doesn't know exactly. So this is all about you. Now, royalty. Royalty is to be entered in the books on due basis, on accrual basis. What it means for? Let's take an example for this also, beta. I've authored a book on which I'll get 20% of the MRP as a royalty. If the MRP is 500 rupees and I'll get 100 rupees per book, in that case, at the end on 31st of March 2021, or whenever statement is received to me, they will send me a statement that this much goods are sold during this month. If you have given me an information that in the month of January, at the end of January, they have sent me a statement that in January 21, they have sold 100 books. So obviously, I may be able to enter 10,000 as my income in at the end of January. That is on 31st of January or 1st of Feb, obviously. And during a particular year, this can be done same in the same way. During 2020-21, I received a statement that 1,000 books are sold. So it means for I will be able to get 1 lakh on due basis. Whether the amount is received or not, there is no problem at all. This will be entered in the books of accounts as our income. Is that clear? Dividend. Dividend is always entered in the books when the right to receive payment is established. That means for what that has already been discussed in the previous years also, that dividend is not a surety. If dividend is proposed, declared, these are the words. But dividend will be entered in the books by the shareholder only when his right is established. His right is established only when dividend is declared. When dividend is proposed, it is not. He will enter it in his books of account as dividend is declared because right is established. But if dividend is proposed, shareholder have no right to receive it because it is not yet declared. Once it is declared, only then right to receive is there. So if it is declared, then he may enter in his books of accounts. If it is proposed, then it will not be entered in his books of accounts. So this is given by a graphical presentation which is already discussed with you. This has already been discussed that if there is any uncertainty regarding the revenue, then it will not entered in the books of accounts. It will be kept pending until and unless it is not confirmed. So here it is mentioned in the last paragraph. I would like to refer that also. When such consideration is not determinable within reasonable limit, the recognition of revenue is postponed. So if there is any uncertainty regarding the collectability, here it is given when the uncertainty relating to collectability arise subsequent to the sale. This is what when we have sold the goods, it was confirmed that the goods amount will be received. When we have provided services, amount will be received. It is for sure. When we have uh, given a loan to someone, then interest is due in on regular basis. But interest is not yet received. We have entered in the books only on the basis that we are certain that the amount will be received from the loan taker, from the person who has taken loan from us, or from the company to whom whose shares are purchased by me. Or third thing is there that the that the publisher of the book is sure that he will make the payment. But later on, we come to know that the amount is not sure to be received. We are not certain that the amount will be received in full, or there may be some less amount which will be received, or there may be some other issue which has come into our picture. So if there is any uncertainty, we will have to create a provision for the same. Income will be recognized as it is. We will not change the income. Instead, we will create a separate provision for the same, just like we are creating provision in case of contingencies and events occurring after the balance sheet date. अगर आपको लगता है शुरू में तो जब आपने सेल करा, सर्विस रेंडर करी, या आपने इंटरेस्ट डिविडेंड या फिर आप लोगों ने रॉयल्टी को किताबों में रिकॉग्नाइज किया, तब कोई दिक्कत नहीं थी. बट लेटर ऑन यू कम टू नो एट द as on 31st of March, we can say, preferably as on 31st of March, we come to know there is some uncertainty regarding the amount. So for that we may create a provision. उसके लिए हम लोग provisioning कर लेंगे. और अगर दूसरा क्या लिखा, when such consideration is not determinable, if consideration is not confirmed that how much amount will be received, we can enter in the books only on the basis if amount is confirmed. If amount is not confirmed, how much amount will be received, then its revenue will be kept pending. Its recognition will be kept pending. That is also an important point. An enterprise should disclose the circumstances in which revenue recognition has been postponed. But this is the most important point. Why revenue is postponed, why it is not recognized, that is to be disclosed properly. Reasons are to be disclosed properly. So illustrations are given to you for your reference. Yes. Sir, uncertainty of discount or bad debts already discussed. Sir, it is not violating the prudence concept that was recorded revenue before it is received. Let's try to understand this thing. What is prudence concept? Concept says do not anticipate gains. Do not anticipate gains. वो कह रही है कि गेन्स को किताबों में नहीं डालना. इट इज नॉट टेलिंग यू टू डू नॉट एंटिसिपेट रेवेन्यूज. What is gain and what is revenue? Let's try to understand this thing. What is the difference between income and gain? Income is against some activity. It is against some activity done for earning income. Certainty is sure while doing activity. I would like to define it in 3 lines. What is an income? Income is done. Income is what? It is against some activity. Income is generated against some activity, and that activity is done to earn some income, obviously. And its collectability, its recovery is for sure when we are doing that activity. Means हम लोग कोई काम कर रहे हैं और काम इसलिए कर रहे हैं कि हमने पैसे कमाने और पैसे आने की श्योरिटी है, तभी हम वो एक्टिविटी को कर रहे हैं, तो उसी को इनकम कहा जाता है. गेन is an uncertain profit. Gain is an uncertain profit. Gain is an unexpected profit. Gain is against some contingency. Against some contingency. So what is gain? Gain is not pre-planned. Gain is not for sure. Gain is always against some uncertain profit. Gain is an uncertain profit. It is against some contingency, which may or may not happen. But when we are selling the goods, this type of thing is not there, that the amount may or may not be received. Because if amount may or may not be received, then we will not sell the goods. We are selling the goods with the certainty that we will receive the payment. And what is gain? Gain is an uncertain amount. It occurs suddenly, or it results from some occurrence or non-occurrence of some contingency, or occurrence or non-occurrence of one or more future events against some contingency. There is a contingency that the amount may or may not be received, and it will depend upon occurrence or non-occurrence of one or more future events. So I would like to describe it in Hindi also now. इनकम का मतलब है जब हम लोग कोई काम करते हैं और काम इसलिए कर रहे हैं कि हमने पैसे कमाने हैं और उसकी जो पैसे आने की जो सर्टेनिटी है वो कंफर्म्ड है. गेन में ऐसा नहीं होता. गेन हमारा किसी कंटिजेंसी पे डिपेंड करता है, जो होगी तो पैसे मिलेंगे, नहीं होगी तो पैसे नहीं मिलेंगे, और इसमें कोई सर्टेनिटी नहीं होती कि पैसे आएंगे, और इसमें कोई, या फिर ये सडन होता है, जैसे रिकवरी ऑफ बैड डेट्स एक सडन प्रॉफिट है, या फिर अगर आप लोगों को कहीं से कोई शेयर्स में गेन, आपको कोई किसी पे आपने केस लगाया और आपको पैसे मिल गए, वो भी एक अनएक्सपेक्टेड प्रॉफिट है. तो वो गेन कुछ और होता है बेटा. फर्स्ट ऑफ ऑल यू हैव टू कीप इट इनटू योर माइंड. ईशा, इज दैट क्लियर? Sir, if dividend declared is treated as completed, if dividend is declared, it is treated on completion method. If dividends, it is treated on completion method. Let's try to understand this thing, beta. These methods are related to only and only rendering of services. There are 5 items in this AS. Let's try to understand. Every AS is depending upon different things. Sale of goods is depending upon transfer of property to the buyer against some consideration, where risk is also transferred, reward is transferred. We can consider its income. While talking about rendering of services, it will be considered on proportionate completion method or completed service method. Both options are available. This is as per the understanding of the businessman, what service provider, whatever method he may use, it is up to his choice. Then if we are receiving interest as our income, it will be recognized on time basis. No proportionate completion method or completed service method is related to interest. Royalty is to be recognized on the basis of accrual concept, that is due basis. Dividend is to be entered in the books on receiving basis when the right to receive is established. These five are separate from each other. They have no correlation with each other. Don't mix sale of goods with rendering of services, or interest with sale of goods, or royalty with dividend. These are all five, and you will have to remember this table. This table is very good. You can understand it. Is that clear to everyone? To whomsoever AS9 is clear, please send me your confirmation. Yes, it's clear. If there is any doubt, please tell me. Waiting for your answers. Send me your answers. Is it clear or no? It's very easy, yes. I assume that it is clear to everyone. I try to make it very easy for you. Also tell me one thing, whether you have done amalgamation in your previous accounting subject or not. In accounting, have you done amalgamation or not? Is amalgamation a new chapter for you, or it has been done earlier also? सभी को clear नहीं हुआ? It is not clear to everyone, I assume. Many students have not sent yet. It's clear or not? Also tell me, amalgamation, have you done it earlier or not? Very good, very good. Amalgamation is a very good topic. Let's try to understand it first. AS14 we are going to start. This is amalgamation. Accounting for amalgamation. So what is amalgamation? Amalgamation meant for, there is a company named A Limited. It merged with another company named B Limited. This is a transferor company, and this is a transferee company. A Limited has lost its existence. B Limited have absorbed A Limited. This is called merger. This is called amalgamation. One thing. Is that clear? This AS is going to be very important because this have a complete impact on your chapter also. There is a chapter in advanced accounting amalgamation, which will be a important chapter from examination point of view. So try to understand it. Another thing is there is a company A Limited, another company is B Limited. Both are merged with each other, and a new company is formed named AB Limited. A Limited has lost its existence, B Limited has lost its existence, and a new company is formed, AB Limited. This is also called amalgamation. So there are two types of amalgamation: when one company merged into other, or some old companies are merged into another old company. But I can say it may be one or two or three companies which may be absorbed by B Limited, absorbed by another old company. It is called amalgamation. Second is, number of companies are there. They have merged with each other, and a new company has come into existence. Then in that case also it is a merger. It is also amalgamation. Now amalgamation is of two types. One is merger. Second is in the nature of purchase. What is merger and what is purchase, that you have to understand. Amalgamation is in the nature of merger when old company, that is A Limited, merged with B Limited, all the assets and liabilities are taken over at book value by, okay, just a moment. Yeah, there is a company A Limited absorbed by B Limited. Now it may be merger in the nature of merger. Amalgamation is of two types. One is amalgamation in the nature of merger. Second is amalgamation in the nature of purchase. So if it is in the nature of merger, in that case, all the assets and liabilities of A Limited, whatever the assets and liabilities are there, that will be taken by B Limited at book value. All the shareholders, specifically equity shareholders, I'm talking, equity shareholders got shares in B Limited. Obviously, equity shares means they become the shareholder in new company. You need not to write it down. If you are not interested, you can understand it. I'll give you the summary also. I will correlate it with the AS later on. It will be easy for you. All the reserves of A Limited are taken. All the reserves of A Limited are as it is taken over by the B Limited. Those have gone to the B Limited balance sheet. Asset liabilities at book value, shareholders I have already discussed. Specifically, equity shareholders become equity shareholders of B Limited. So this is in the nature of merger. In this case, this is very much simple. A method is used which is named as pooling of interest method for accounting. The name is there. Method of accounting is pooling of interest method, which will be used in this case. Second is in the nature of purchase. If amalgamation is the nature of purchase, note it down. चलो आप नोट डाउन ना करो चलेगा, मैंने ऑलरेडी बता दिया. Need not to note it down. In the nature of purchase, what happens? In the nature of purchase, if any condition of merger is not followed, of amalgamation, in the nature of merger is not followed, any condition, then it will be amalgamation in the nature of purchase. Means all assets and liabilities are not taken over. Few are taken over, few have left. Or all assets and liabilities are taken over, but equity shareholders, all equity shareholders of previous company doesn't become equity shareholder in new company. But if it also has happened, but all reserves are not shown in the books in the new company, then in that case, if any of the condition is not fulfilled, then it will be amalgamation in the nature of purchase. And in this case, purchase method is used for accounting. Purchase method. This is the name of the method of accounting. Purchase method of accounting for amalgamation is used. Assuming it is clear, see here it is. It is AS 14 revised. Let it be very much clear. It has been revised also. We will deal with the accounting to be made in the books of transferee company, not the transferor company, but accounting in the books of transferee company. Already discussed merger or purchase. How to account for as per pooling of interest method and purchase method. That is to be discussed. Disclosure requirements for both type of amalgamation that you will deal. What is amalgamation? Discussed. Transfer discussed. Merger, purchase discussed in the nature of purchase. So this is to be underlined or this is to be kept into mind. Assets and liabilities are transferred. All. Point is mentioned all. Shareholders are transferred. All equity shareholders are transferred. But there is a condition 10% equity shareholder may be left. Shareholder holding not less than 90% of the face value of equity shares of the transfer company. That means for if we have issued shares worth rupees 1 lakh, means the face value of equity shares of A Limited is 1 lakh, then minimum 90% means 90,000 face value of shares must be become shareholder in the new company. How much shares they will get, that is not a problem. But they become shareholder in the new company. Why this 10% has been left? There's a reason. Because number of times this becomes a this comes into we can say fraction. In that case, we will have to take it. So due to that reason, 90% is written here. Other than the equity shareholder agreed here immediately before the amalgamation, other than the equity shares held herein immediately before the amalgamation, or its shareholder or their nominees. Shareholder holding not less than 90% of the transfer of the company other than the equity shareholders shares already held therein. This meant for something different. Like to clarify you, good point is there. A Limited have 10,000 shares at the rate of 100 each. So it is 10 lakhs. B Limited already have some shares of A Limited. B Limited have already invested in shares of A Limited earlier. How much? B Limited have already 1,000 shares of A Limited. Already 1,000 shares. So 90% of remaining will be kept into mind. Means 9,000. Out of these 10,000 shares, 1,000 are already held by B Limited. So there is no worry for them. We will have to consider this thing on. Those which are not with the B Limited. Because A Limited is going to take over B Limited. A Limited is going to be merged into B Limited. So if B Limited has already some shares of A Limited, that will not be considered for calculating this 90% provision. That is mentioned here. Other than the equity share already held therein immediately before the amalgamation by the transferee company or its subsidiaries, or even if any subsidiary is there of transferee company, that will also be kept into mind. The consideration for the amalgamation received by those equity shareholders who agree to become equity shareholders is charged wholly by the issue of equity share. Means equity shareholders of transfer company must get equity shares in transferee company except a fraction which will be paid in cash. If something comes into points, then that may be paid in cash. Otherwise, equity shareholders will get equity shares. Most important point is business of the transfer company must be carried on as it is by the transferee company. Transferee company has no right to switch off the business of transfer company and start new business. They must have to carry on the business of transfer company as it is. Already mentioned, assets and liabilities are to be taken at book value, except to ensure a uniformity of accounting policy. Some assets values may be adjusted if some accounting policy uniformity is required. What it means for, just assume A Limited is using FIFO method for valuation of inventory, whereas B Limited is using average method. Now, when B Limited will take over A Limited, obviously it will value inventory according to average method, because he is interested to have uniformity in accounting policy which is to be followed by him. So due to that reason, they have changed the value of inventory. So that is allowed. Means for uniformity of accounting policy, they may change the value of asset. Otherwise, they are not allowed to change the value of asset. They must have to value the asset at their book value beta. Is that clear? In the nature of purchase, already discussed, if any of the condition is not followed, then nature of purchase is there. In nature of purchase, one thing is very much important, which is not discussed yet. Statutory reserves will be taken as it is by the transferee company in case of nature of purchase also, because that is a compulsion. Here it is not mentioned yet. It will come to your notice within just few time. We will discuss it. There are some statutory reserves. We will discuss it what it is. These statutory reserves are to be taken as it is. So before that, I would like to discuss the consideration. What is consideration? Consideration meant for amount paid against amount paid by transferee company to transfer for purchasing that company, for acquiring that company. It may be by way of cash, it may be by way of shares or anything which have a money or money is worth. So that is given here. Consideration for the amalgamation means the aggregate of the shares. Means if we have received some shares or other securities issued and payment made in the form of cash or other assets by the transferee company, means whatever transferee company give to the shareholders of the transferor company, that will be totaled whatever transferee company will give to the shareholders of the transferor company, because you know it very well that who is the actual owner of the company. Actual owner of the company is the shareholder of the company. So whatever is paid, that will be paid to the shareholders of the company. So whatever shareholders of the transfer company will get, that will be the consideration, and we are calling it as a purchase consideration. In determining the value of consideration, an assessment is made of the fair value of its elements. So there may be a chance while calculating the consideration, we may total it that how much is the value of those items, because if they have given shares to its account to the equity shareholders, shares to the equity shareholders of A Limited, then it will not be taken at face value. Instead, whatever is the market value of, assume equity shareholders of A Limited get 1,000 equity shares of B Limited. Now the face value is only 100 rupees, but market value of these shares is 10,000 rupees per share. In that case, consideration is equal to 1,000 equity shares at the rate of 10,000 per share. So this will be the purchase consideration. Not the face value. Instead, the fair value of the item of the whatever is given to the equity shareholder. Note it down. Is there any doubt? Tell me. The old point is always there that payment is probable and can reasonably be estimated, only then it will be entered in the books of account. Otherwise, it will be difficult. So that has been already discussed. Treatment of reserves. In case of amalgamation in the nature of merger, all reserves will be taken as it is in the same form in which they appeared in the financial statement of the transfer company. If general reserve of the transfer company becomes the general reserve of the transferee company, the capital reserve of the transfer company will become capital reserve of the transferee company. Means identity of the reserves must be preserved as it is. So they will be used for the purpose of distribution of dividend as it is. Means their treatment, their everything will remain same. Yeah, there may be some adjustments which will be made to it if it is required. When an amalgamation is accounted for under the pooling of interest method, then a uniform set of accounting policy should be adopted following the amalgamation. Some I already mentioned you, for following some uniform set of accounting policies, you may change the value to some extent. So difference between the amount recorded as share capital issued and the amount of share capital of the transfer company, amount recorded as share capital issued and the amount of share capital, this will be adjusted to the reserves. If they have received that I can explain you again, because everything is explained by way of example, that is always good. Uh, you may say assets of A Limited worth rupees 10 crore are taken over at book value. Liabilities of 6 crores are taken over at book value. So 4 crore is the payment to be made. Whenever we are talking about liabilities, it includes some other things also. So 4 crore is to be paid to the equity shareholders. But while making payment of 3.9 crore is made due to some calculation or due to some accounting change in accounting policy, or there may be any other issue. So difference of this zero point 0.1 crore, that is 10 lakhs, will be made adjusted to, will be allowed to be adjusted to reserves. That may be general reserve or profit or loss account. Obviously, that will be adjusted in the new balance sheet. In the new balance sheet, if A Limited reserves are, you may say general reserve, A Limited general reserve is 50 lakhs, B Limited general reserve, which is already with them, is rupees 90 lakhs, then it is 140 lakhs. Out of this loss or profit, whatever occurs, if we have paid 3.9 crore, this is a profit to us. If it is a profit to us, then that profit will be adjusted, will be entered, will be added in this, and this will become 150 lakhs automatically. Means this will happen automatically, because in this case you have been benefited by this. You have to pay 4 crores, but you have paid 3.9 crores. So there is a benefit of 10 lakhs. That benefit of 10 lakh will be adjusted to the reserves automatically. How it will be adjusted? A Limited reserves taken over, B Limited reserves which is already with them in their books. So total is 140 lakhs. In that, whatever adjustment is required, that is done. So this is 150 lakh. Is that clear to everyone? Till now, everything is clear. Is there any doubt? Send me your confirmation. Everything is clear or not, beta? Waiting for your response. Waiting for your response, beta. Clear or not clear? Send me. All clear. Very good. Very good. Not clear to remaining? Because number of students haven't sent their confirmation whether it is clear or not. In the nature of purchase, whatever adjustment is required, that will be done in capital reserve or goodwill. Means here in this case, if it is a merger, then it will be treated in this way. If it is not a merger, instead it is what? It is in the nature of purchase. If in the nature of purchase, what we have to do in this case? Same example is there. In case of purchase, what we have to do? We have to pay 4 crores, but we have paid 3.9 crores. So there is a profit. This profit will be adjusted with capital reserve. So in the new company, in the transferee company, 10 lakh will be added to the capital reserve. And in case there is a loss, it will be written off or adjusted to the goodwill or debited to the goodwill. His loss will be debited to goodwill, profit will be credited to capital reserve. So if we have to pay 4.1 crore, then what will be the treatment? It is in front of you, beta. In that case, it will be a loss of rupees 10 lakh. If we have paid 4.1 crores, then obviously there's a loss of rupees 10 lakhs that will be debited to goodwill in this case. And in case of merger method, 10 lakh will be deducted from general reserve. Is that clear, beta? Note it down. Yeah. One more thing is there regarding statutory reserves. What are the statutory reserves? Some reserves are statutory reserve like investment allowance reserve or sinking fund method. Sinking. One thing is there that was investment allowance reserve, development allowance reserve. These are created according to some law. Some law has made it compulsory that we have to create some statutory reserves. So these statutory reserves are to be carried forward as it is by the transferee company in both cases, whether it is a merger or purchase. Means in purchase, only these reserves are to be carried forward as it is. In merger, all reserves, so there is no worry. And it is to be kept in the books, it is to be retained in the books as it is until and unless their disclosure, their requirement is there. When requirement is not there, they may be written off. Otherwise, they will have to carry it forward as it is written. Now, how to treat the goodwill arising on amalgamation? Whatever capital reserve is there, that will be obviously becoming part of your capital reserve. There is no problem. But goodwill, as it is not allowed to be kept in the books for long term. So, whatever goodwill has been created due to the reason of amalgamation in the nature of purchase, we have to write off that goodwill within the 5 years, unless more than that period is expected. So if more than that period is justified, we may take it. Otherwise, whatever goodwill is there, like in the previous case, it is rupees 10 lakh. This goodwill of rupees 10 lakh must be written off within the period of 5 years. So 10 lakh divided by 5, 2 lakh is to be written off every year. And the entry is normally known to everyone, goodwill account debit. It is normally known to everyone that we have to write off our goodwill, profit or loss account debit to goodwill. Rupees 2 lakh goodwill is to be written off every year. Normally 5 years, more period may be taken if justifiable. So whatever is the balance of P&L account, that will be taken off, that will be added to the, in the case of an amalgamation, the balance of profit or loss appearing in the financial statement is aggregated with the corresponding balance appearing in the financial statement of the transferee company. Already discussed. If there is no profit or loss appearing in the transferee company, then in that case, it may be added to general reserve. But in case of nature of purchase, it is not allowed to be taken out. So these are the disclosure which are required. One disclosure is there. You have to disclose the name and the nature of the business of the amalgamating company. Effective date of amalgamation for accounting purpose. Method of accounting used. Particular of the scheme sanctioned under a statute. What is the scheme due to which this amalgamation has happened? Because in case of corporates, this is normally under some scheme to get the benefit from the government of India or government of your country. So due to that reason, it is also mentioned accordingly. So all that is there. Last is amalgamation after the balance sheet date. This is also very good point. When an amalgamation is effected after the balance sheet date, but before issuance of financial statement, in that case, it is a contingency. It will be covered under contingencies and events occurring after the balance sheet date. But the amalgamation is not incorporated in the finance. In such case, it will be disclosed. In certain circumstances, amalgamation may also provide additional information affecting the financial, for instance, by allowing the going concern assumption to be maintained. Means if amalgamation has been happened after 31st of March, but before closing date, obviously in that case, going concern concept has been failed for transfer of the company. In that case, transfer the company will have to show its all assets and liabilities at realizable value. Because in that case, going concern consumption is finished. The amalgamation may also provide additional information affecting the financial statement themselves, for instance, by allowing the going concern assumption to be maintained. So it all depends how to treat. We will discuss it in the next lecture if there is any doubt, beta. All illustrations are to be done by you for the AS9, AS14. Also read next AS17 minimum. So this is your homework. Do it. All the best. Met after the break of 3 days. Will be again on Monday at 7 o'clock. Be ready for the live class. Live class is always beneficial बेटा. Live class के बिना आप लोगों को कभी भी फायदा नहीं होगा. आपको live class लगानी चाहिए ताकि आप साथ के साथ हर चीज को डिस्कस कर पाओ. So I suggest you to go for live classes. अगर live class को दोबारा देखना है तो recorded classes available हैं, but live class is very much important. So try to go for the live class. In nature of purchase, only statutory reserve carried forward. Exactly, Memon, you are 100% right. Okay then. Could we close the session, sir?